Welcome to the Transparent FX Academy. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite strong historical monthly demand and support zone. In fact, what we can see is that from here, multiple rejections have been created to the upside. Every single time the market reached this zone, it got rejected to the upside very aggressively, showing strong institutional buying around this zone. And we will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that every time the market is testing this zone, strong institutional buying happens, and we can also keep in mind how the last retest of this area was just a few months ago, and the market followed with yet another massive rejection to the upside. So from a monthly standpoint, the market is rejecting to the upside strong historical structure support. Let's keep it in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear as well. The market has been following exactly what you would expect in a situation like this. In fact, what we can see is that going into the area, the market had a bearish trend, creating weekly lower lows and lower highs. Then we had this double bottom being created exactly inside of that support and demand area that we have previously identified on the monthly time frame. And after that, which is the inversion pattern, in this case, the inversion pattern from a bearish trend to a bullish trend was this double bottom, the market has shifted to the creation of weekly higher highs and higher lows. So the next logical step would be for the market here to create a new higher low and the market to continue higher. So from a weekly standpoint as well, everything looks quite bullish since we still are in a bullish trend. Now, when you have a bullish market and a bullish trend, you expect the market to create weekly higher highs and higher lows. Now, the higher highs and higher lows are supposed to come every time with the retest of a previous level of resistance, which at that point becomes support. An ideal uptrend looks like something like this. So higher highs and higher lows being created, with every higher low being created at the previous higher high. Now, this is obviously an ideal uptrend. Rarely the market manages to follow exactly this pattern, but the tendency of the market is to create uptrends and downtrends following these rules, with previous resistance after being broken to the upside that starts acting as support. The market goes for the retest and continuation to the upside. I'm sure you have seen this pattern unfold over and over again. And right now we're seeing exactly the retest of the previous resistance turned support. In fact, here on the weekly time frame, this level was acting as previous resistance. The market then broke it to the upside, and that previous resistance became support here, and right now again is acting as support as the market is testing it, with good probability of seeing a potential rejection to the upside. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, the situation is quite clear. If from here the market will continue lower, we will essentially have the creation of this overextended M pattern. Now, after the creation of an overextended M pattern, what you would expect is a rejection to the upside. I've spoken about this pattern over and over again. I'm sure you have already seen this pattern unfold. Let's see if we can find an example of an overextended M pattern being created. And we can see, for example, one right here. We have this overextended M pattern. After that, the market immediately rejected aggressively to the upside and started a correction. So if from here the market will once more drop to the downside inside of the strong demand and support zone that we have previously identified on the weekly time frame, there is the probability of seeing more institutional buying inside of this zone at that point, with the market reacting to the demand and support from an institutional perspective with a potential rejection to the upside. That is definitely possible. Speaking about institutional buying, let's go and see what is going on if we look at the commitment of traders, so what the big players in the market are doing. Now, if we're looking at the data for the euro, we have to keep in mind that we are already looking at euro USD, because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively increased. We went from 115.4k up to 118k net positions. So we went from 128 all the way down to 115, now back to 118k in the short term. So in the short term, we are now starting to increase again net positions. But what is important is that if we look at the long term, we actually had a complete flip from a negative net positioning up to a positive net positioning. This means that institutions went from having more shorts than longs, because minus 66k net positions means that institutions had 220,000 shorts compared to only 153,000 longs, all the way up to now having 118,000 longs on the positive side, meaning the complete opposite. So more longs than shorts, with 252k longs compared to only 133k shorts. And this data is already on the Euro USD, because again, all currencies on the spot are traded against the USD. So let's keep all of this in mind and move back to the chart. So if the market here will drop, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, if the market here will drop instead of this support, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this demand and support zone. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.